Okay, so picking up where we left off, we're going to record some journal entries. So we've analyzed the transaction, we know which accounts are affected, we know if they're increasing or decreasing, and we've translated that to debits or credits. So those are actually the first couple steps. The first two steps here are really what we did in Chapter 1 and what we've done so far. So the first thing I do is identify which accounts are affected and what type of account that is. So asset, liability, expense. So once I know which accounts are affected, and again remember there's always at least two, there could be more than that, then I determine if the balance in each account is increasing or decreasing. And then I translate that increase or decrease, translate increase or decrease, translate into debit or credit. And remember, you know, at first this might be a little bit slow, but if we go back to where is it? Sorry. Oops, I missed it. If we go back to this one, sorry. Either of these. So either this the accounting equation or the chart. As long as you've identified which account it is and what type it is, once you know whether it's increasing or decreasing, you go to the chart to see whether that's a debit or a credit. And at first, it's kind of slow. It takes a while to do one journal entry, but the more you do, the faster you get with it, and it really does become easier. So keep this handy at the beginning here as you're going through this so that you can just refer to this one. And once we've done that, then we record it in the journal. And that's what I'm going to do in this video. The fourth step, oops, why are you down there? The fourth step is to post it to the ledger, or sometimes in accounting instead of, or at least in class, instead of a ledger, we use a T account, because a T account is really just a representation of that ledger. Now, if you remember when we were analyzing transactions in Chapter 1 with the accounting equation, the last step was to determine if the accounting equation is still in balance. And now what we're really doing that same thing, but we're going to do that through what we call a trial balance, which just pulls the balance in each account. So I'm going to record some journal entries in this video, and then I'll probably make a separate one for the ledger and the trial balance. So let's just look at a couple of these. This is in the demo problems. So Jack Davis opened a medical practice in Sacramento, California. He had the following transactions during the month of January. So the first one is that the business received cash and gave capital to Davis. So if we walk through our step, the first thing we do is figure out which accounts affected and are affected and what type of accounts they are. So the business received cash. So there's one account right now. I know that's an asset. And I can see capital, that's a capital account, right? So that's capital, part of equity. The cash is increasing, right? The business got cash, and the capital is increasing because the capital balance is going up. So if we go back to our chart, we see that if an asset is increasing, that's a debit, and if capital is increasing, that's a credit. So now that I know which is a debit and which is a credit, I can enter them in the journal. So on January 1, my debit will be to cash for $35,000. And then I do the debit first, and then I do the credit. So it'll be Davis Capital, and then that'll come over here. So this is my debit column, and this is my credit column. On a real journal, it would look a little bit better, but you get the idea there. And so there's my first transaction. And then you would put an explanation. They want you to include an explanation with each entry on when you're doing it on MyLab, and it'll just say like owner contribution or something like that. Then my next one's January 2nd. I purchased medical supplies on account. So which two accounts are affected? Medical supplies is one of them. That's an asset, and I got medical supplies, so that's increasing. If I purchased them on account, I owe the money, so that's accounts payable, and that's a liability, and the amount I owe is increasing. So to increase an asset, medical supplies will be my debit. To increase a liability, I would credit that, so accounts payable will be my credit. So I'm going to do the debit first, and the name of the account will be medical supplies, and I will debit that asset to increase it by $13,000. My credit is to accounts payable, so I'm going to indent that, and then I put that in the credit column, $13,000. I put my explanation, and I'm done. Perform services for patients receiving $1,900. So it looks like I received cash. So there's cash, that's an asset, and it's increasing. And what did I get that for? Services. So I should see service revenue as my other account, and that is a revenue account, and that is increasing. So to increase an asset, I debit it, so that'll be my debit. So January 4th, I'm going to debit cash for $1,900, and then my credit will be service revenue. That's the name of the account, and I will credit that by $1,900. And remember, I said revenue is always a credit. So even if you figured that one out first, you still write that one second. You always write the debit first. On the 12th, I paid monthly office rent of $2,600. So as soon as I see the word paid, I can see that cash, which is an asset, is going down. I paid something, so cash is going down. What did I pay? I paid my rent, so the other account should be rent expense. That's an expense, and the expense is actually going up, or you could think of it as equity is going down. Think of that either way you want. But I just tend to think as soon as I see expense, I know that's going to be my debit. So on January 12th, I will, so this will be my debit here, and if cash is going down, that will be my credit. So I debit the account called, rent expense for $2,600, and then I will credit cash, which will decrease the balance in the cash account. That's what the credit will do, and put in my explanation, and I'm done. Recorded $10,000 revenue for service rendered to patients on account. So here's my service revenue again, right? So there's service revenue, and I know that that's going up. That'll be my credit, but they didn't pay me yet. I didn't get cash. They owe me. So when you perform services on account, that's called accounts receivable. It's what you're going to receive later. That is an asset, and that's going up. The amount of money that's owed to you is going up, so that should be my debit, and revenue will be my credit. So on January 15th, I will debit accounts receivable for $10,000, and I will credit service revenue for $10,000. So now I've done the first three steps. I've analyzed them, I figured out the debit or the credit, and I posted them to the journal. So that's what I've done in this one. I've recorded them in the journal, and I will post them to the ledger later. So I've identified the type of accounts, I figure out if it's going up or down, and I translate that into debit or credit, and then I record it in the journal. So that's what I've done here. So this is an example of a completed journal here. You can see a couple things. Again, we always write the debit first. then credit. I indent for the credit, and again, most of the time MyLab will do that for you. I don't leave any spaces in between. If you see a space here, right, that's indicating that there's you're starting a new transaction. So you wouldn't want to leave any spaces. Here, this one is a compound entry, and we can see I have more than just one debit and one credit. I put all of my debits first, and the sum of the debits has to equal the sum of the credits. So no matter how many debits and credits I have, the total debits must equal total credits. So total debits must equal total credits. And there's a couple more problems in the practice problems for you to look at that. And actually, let me let's see where we are time-wise here. Okay, that's probably good, and then I'll come back and do the ledger accounts for you.